Markets near a day's low in a volatile session. Consumer durables and realty are the big drags, while the FMCG and healthcare see some bit of a green. Midcaps underperform. Zomato slips as rising competition in quick commerce pushes back margin expansion and drives a faster network rollout. Swiggy too feels the heat. Dixon Technologies slides on profit-taking after an inline quarter and with growth expected to taper. The MD tells CNBC-TV18 that FY25 revenue will top Rs 40,000 crores and margins will start rising after FY26. US President Donald Trump signs a flurry of executive orders after assuming office. He declares a national energy emergency, revokes the EV mandate, establishes DOGE and external revenue services, and pardons capital rioters. He also plans to impose tariffs of up to 25% on imports from Canada and Mexico. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. The markets today has been a very flip-floppy day, right? Look at the highs and the lows for the Nifty today. 23,111 was the lowest point and the highest point is somewhere around 23,426. So, we've seen the markets move from the green to the red and then again back to the green. Now trying to make a comeback, though it's still almost in the day's lowest point. Nifty as of now is 23,280 levels, 23,300 levels. Contributor-wise, what's actually dragging the market today? We have some bit of the private bank side. So look at ICICI Bank or the banking side, you could say. ICICI Bank, SBI is among the top drags coming in. And other than that, Reliance, obviously, Reliance a heavyweight. So if Reliance falls, that is also a bit of a pressure coming in on the Nifty 50. What's on the green side is some of this IT names. So you have Infosys that's managing to hold on to gains. Other than that, FMCGs, you have ITC, which is managing to hold on to gains. And obviously, as of now, when you're looking at it, Nifty FMCG is the only sector that's managing to hold on to some bit of a green. At one point of time, all the sectors today were trading in the red. So yes, that's how the market is looking like. We have Nifty Bank, let's pull that up as well, because Nifty Bank is also clearly under pressure today, down 0.9% approximately in trade that we're watching out for. So underperforming in terms of the benchmark indices. Other than that, the Nifty Mid and the Small Cap too is underperforming the benchmark indices today. So Nifty Midcap down 1.4%, Small Cap also is down 1.5% in trade. Let's pull up the India VIX because that's going to be interesting to watch out for. As of now, it's 4% up in trade. We've seen that volatility through the day for the market. So let's keep an eye out on where that is going to be headed in the second half of the trading session. Individual stocks, I want to highlight some of them. You have hospital stocks, some of these names are in focus. Apollo Hospital had a note that came in from Kotak, so that is why it is in focus. And with that, we're seeing Global Health or Medanta as we know it, that is also in focus, holding on to some bit of a gain. Earnings movers, we have Dixon Tech, MCX, overall Realty, Zomato, that are among some of these movers and drags actually coming in on the back of the earnings. But let's move on, and Dixon Tech, shift focus to that because that stock, like I mentioned, is under pressure after its Q3 results have been reported. There are an inline set of numbers with estimates with 190% YOY growth in mobile segment. Earlier on, we spoke to Atul Lal, who's the managing director at Dixon Technologies, to understand the business outlook for the company in FY26. Listen in.
Smartphones is a lower margin business globally, and so is the case in India. And that is the reason, in our case, we are going to be deploying a lot of resources and capital in a backward integration play, in the components play, which is more margin accretive. So margin, we feel there is going to be in the range of around 4% in 26. Beyond 26, it should start inching up.
Moving on to the World Economic Forum, Shireen Bain caught up with the Deputy CEO and CFO at Ikea Group, which brings the popular furniture brand Ikea to India. He said that he wants to expand Ikea to other regions of the country, especially Delhi NCR region, and added that he wants India to be the major sourcing hub for the company. Listen in.
We are building, as we speak, two very big shopping centers, one in Gurugram and the other one in Noida. And this big shopping center will have an Ikea store. It's already under construction. It's an exciting project. And we will soon open online sales of Ikea in Delhi NCR as well. At the same time, we have offering online in Gujarat, in Telangana, in Andhra, in Karnataka, and we have opened for now 62 new cities for more online business. So, and then we are exploring and we are scouting for more opportunity to open more physical stores in these states and also in new states as well. We want to open more in Karnataka, we want to open more in Mumbai, in Maharashtra, we want to open in Tamil Nadu as well. So step by step we are expanding. And we are working now in the good discussion, with conversation with the government to try to have harmonized standards so we can produce more in India, so we can both use for domestic consumption, but we can export more from India. India only accounts for 1.5% of the global export of furnishing, not Ikea, in general, only 1.5. And can we agree that India deserves much more than that?
Yes.
So it's a fantastic opportunity, and we are in good conversation with the government to really set up India as a sourcing hub as well.
Absolutely interesting chat there in terms of Ikea focusing on making India one of its important sourcing hubs. But let's move on, and now it's time for Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, pro trader Rajesh Bahithi, Managing Director at Cross Seas Capital Services, gave his insights on the new SEBI guidelines for algorithmic trading. Listen in.
So currently, there is no real regulation as such that debars anybody from trading in algorithms or using algorithmic trading. What is happening is there are two kinds of algorithmic trading strategies that are being deployed today. On the professional or prop side, as what we do, all of our algorithms are approved by the exchange. The trades are entered as algorithmic trades. There's an identifier in the order sequence that identifies the trade as an algorithm. What is happening with the discount brokerages is that they are giving and exposing their APIs, and anybody with access to that API can either write their own code, or there are some pre-authorized vendors who have already matched their trading strategies to these APIs, and they are farming it out to the retail public. And these trades typically don't get registered in terms of an order identified as an algo trade, but rather as a standard internet trade. And I think SEBI has a problem with that. They don't want the algo trades to be identified as standard internet-based trades. They want the algo trades to be identified as algo trades even for this retail segment who are currently coming in using the APIs exposed by the brokers. What SEBI wants to do is that if you want to run an algorithmic strategy and you want to write your own code, then you've got to get that thing certified with the exchange. The strategy has to be approved. And in case you are outsourcing it from certain vendors, those vendors will need to get registered as some kind of investment advisors.
Welcome back. The conversations continue here at Davos 2025. What's the mood on India? How are investors looking at the India story? And more importantly, one of the outperformers of 2024, Mahindra & Mahindra, can it replicate or perhaps even better its performance in 25? Joining me now is Anisha. Anisha, always a pleasure. Many, many thanks for joining us here on CNBC-TV18. Let's start by talking about what the mood is like in your conversations with global CEOs. There seems to be optimism, especially in light of the fact that we have a new regime in the US. I don't know if you were watching what President Trump had to say overnight, but what are you picking up?
So good morning, Shireen. It's great to be here with you. Picking up a lot of optimism, actually, more than what I had expected. Optimism globally, which is something that we hadn't fully expected, and optimism for India, which is something that we've seen over time. Yeah. But what we are starting to see is a lot more focus on how do global companies win in India? What do they need to do differently? What are lessons from companies that have been in India in the past? Some have worked well, some have not. And that's a question I'm getting from a lot of global CEOs, which is tell us what it takes to win in India.
Okay.
And that's
So what have you told them?
what I've told them is that the Indian consumer is very discerning. The Indian consumer wants the highest quality at a very good price, and therefore you got to design products for India. It cannot be products that are designed somewhere else in the world and sent to India, because that's not something the Indian consumer generally appreciates, and we've seen that in many industries. It's also decision making and the agility that's required at times to create that value for customers in India.
And the need for local partners?
And in some cases, partners, yes. In not all cases, some companies have done very well without partners as well. But local partners help understand India. As long as the global company is willing to let the local partner make decisions. Question comes back to where are decisions made?
Yeah.
If you're going to make decisions somewhere in the US or Europe for the India market, we haven't seen companies being as successful. And companies that leave the decision making in India have done well.
Well, you said that you were not expecting the kind of optimism that you're picking up on as far as global economy is concerned. What are they telling you? Why are they optimistic? What are they feeling confident about?
They're optimistic that growth is coming back in some form, especially in the US, and that will have a positive impact across the world. That obviously is counterbalanced by potential trade barriers that may come up. And there is also, in some sense, a clarity that multilateralism is going away, and it's going to be bilateral decisions or bilateral discussions with various countries, and that is a significant change. It is a path towards deglobalization as well, and I was expecting more of a narrative on deglobalization, but the positive aspect was that despite that narrative, there is optimism that the focus will be on the economy, the focus will be on growth.
The focus will be on growth. So let's talk about growth as far as Mahindra & Mahindra is concerned. As I pointed out, 2024 has been a good year for you. You've outperformed in many ways, including, of course, with your stock price. But firing on all cylinders at this point in time as you look into 2025 and the year ahead?
Thankfully, we are. Our businesses are doing very well. They're very well positioned. The actions that we've taken to ensure a very sharp focus on growth has played off. As you know, we started with disciplined capital allocation, then pivoted to growth, and now are focusing on delivering scale. And it's that scale-up aspect that is working well. And we are seeing large businesses do well. We are seeing Mahindra Finance and Techem on a good path to unlock full potential. And our growth gems are very well poised to do a lot more and deliver value for us.
I'll get to each of those businesses in a second, but the overall demand environment, what we have seen is a bit of softness creeping in, and that's been reflected in the numbers as well. What do you foresee? Does the softness persist? Are you seeing any signs of a turn?
So, Shri, we are not concerned. These are blips. The fundamentals in the economy are still very strong. There were a lot of concerns a year or two ago on rural and the fact that rural wasn't picking up. We'd seen tractor sales decline in a particular year as well. Rural's picked up very well now, and we see a number of green shoots there. We've seen double-digit growth in tractors in the last couple of months, and that augurs very well for the overall economy. So we will see at certain points in time sluggishness in certain parts, but that's how economies work. On balance, I think we are still in a very good shape. And I think India will continue to grow well.
So you are confident about the growth on the tractor side?
We are confident about the growth on the tractor side. We think we've come out of the down cycle on tractors. And for the second half, we have talked about seeing a double-digit growth in the second half for an overall reasonable growth for the year.
Okay, let's talk about your new electric vehicle launches, your Born Electric, both your cars that are out in the market now. What's the response been like? What is the kind of order inflow, order intake that you foresee, and what's the waiting period likely to be?
The response has been quite fabulous. Consumers have been, in many ways, if I were to use the term, blown away by the features in the vehicle.
And at the price.
And at the price. From the screens we have, A lot of consumers come back and compare it with luxury German or other vehicles and say that you're giving me everything and more at a significantly lower price. But more than the price, I think it's just the level of features. From the screens to automated parking to Dolby Atmos in a vehicle. Dolby Atmos doesn't even exist in many theaters around the country, but we have that in a vehicle here. And just a wide array of features that exist, I think has been something that consumers did not see that coming in a vehicle. And that's what has really helped give that demand. We have not started bookings as yet, though we have a large number of folks clamoring to be early buyers of the vehicle, and we will do our best to try and satisfy all our consumers.
You know, in terms of capacity and being able to meet the demand that you foresee as far as the two EVs are concerned, what's the outlook?
We have a capacity initially of 5,000 a month that will ramp up to 10,000 a month at some point in time. And from an EV standpoint, we feel that's a very good start. We do want to get to a 30% penetration in the next 3 to 5 years, and we feel that we're pretty well on track to do that.
But, you know, the concerns around the lack of charging infrastructure, you know, residential charging and so on and so forth, do you continue to see those as being constraints to the kind of penetration numbers and targets that you just spoke of?
There may be constraints in the short run, but for the most part that should not be an issue, because the vehicles we have a certified range of 682 and 656 kilometers and a real life 500 plus across multiple cities that we've tested it in. And therefore consumers will typically need to charge once a week. So if you have charging at home or an office and can charge there once a week, that should be enough for most. That has to be supplemented with charging on highways. And this is an area where the government is doing a lot to try and outline what's required for that. The Ministry of Heavy Industries in particular has been putting a lot of focus, mapping routes, mapping highways, understanding where we need to put charge points. So my sense is over the next year we will start seeing all of those things come in place as well. And with a combination of charging at home or office through a standard charger and charging on highways with a fast charger where we can actually charge in 20 minutes, we should be behind all the problems or the concerns that are there on charging.
You know, there are reports suggesting at this point in time that the government may review its policy to get manufacturers to actually make in India, especially as far as the EV side is concerned. And now, you know, you have Elon Musk quite literally in the White House. You know, what's the expectation in terms of possible changes? Are you hearing anything on that front?
We're not hearing any possible changes, but our stance has always been that we welcome competition. We feel that we will get better with competition. We have over many years, and from an electric vehicle standpoint, it will help grow the market as well. So the part that what we've seen the government always focus on is make in India, because make in India is essential. We have the ability today to make world-class vehicles. What we've done with our two vehicles is a testament to that. These are designed in India. The technology comes from India. Our Research Valley has really set them up. And that's something that we are starting to see as world-class products being made in India and being made for the world now. So that is in line with the vision that the Prime Minister has laid out on Vikasit Bharat and on India being a manufacturing hub for the world.
You know, in terms of capex and given all the businesses that you operate in at this point in time, as well as what you see demand looking like, 25, what could we expect as far as the capex number is concerned?
So we have laid out capex for 3 years. We're pretty much on track with that. Businesses are generating a fair amount of cash, so we stand very comfortable from that perspective, and that allows us the ability to really take bigger and bolder bets with some of our businesses to drive growth. And that's what we've done with EVs. That's what we're looking at with our farm business and with many of our growth gems.
So what could these bigger, bolder bets entail as far as the growth gems are concerned, and even for the farm business that you just spoke of? What should we expect?
So the first thing I want to say there is bigger, bolder doesn't always mean acquisitions.
Right.
Bigger, bolder also is about organic growth, because organic growth is one of the best drivers. And if we look at the EPS growth that we've had as a group consolidated from 21 to 24, it's north of 60% every year. I'm not suggesting we will continue that growth rate, but we've signed up for a 15 to 20% annual growth rate going forward. So organic growth is a very important part, and there, what I mean by being bolder is having the ambition to think big and say, here's what we want to do. Here's the kind of product we want to create. This is a customer segment and the service we want to offer to the customers. So it's that mindset where we are open to taking those bigger bets. We are open to signing up for higher targets. And that has been one of the secrets of our success, to be able to create a much higher bar and say, we will deliver something that you did not expect.
So across each of your businesses, over the next 12 months, how much higher are you willing to set the bar?
The bar has been set very high already. So at this point, it is about implementing to meet that. On EVs, you've seen the results of that. Not just EVs, even the products that our auto business has launched, both in SUVs as well as in light commercial vehicles, have been of a very, very high quality. And we've seen that response from customers. The farm business, with its new line of products in OJA and its focus on international, is starting to do extremely well. We've gained market share from 40 to 44%. And when you're in the 40s, it's not easy to gain market share at that level. Our electric three-wheeler business has a market share of 45%, competing with some large players out there, and continues to do very well. As we look at each of our growth gems, we've got a fairly ambitious plan laid out for them in terms of capitalizing on these strengths that lie in the business. We're well positioned in many markets, but in many we are playing in a smaller segment of the market, and we want to actually grow much bigger. So that's the pathway we've outlined. Along the way, if there are acquisitions or joint ventures that make sense, we will do that, but we'll be disciplined in doing that. We're not going to go out and pay some crazy valuations just for growth, because we can grow organically very well.
So what would be the headline for 2025 for the group?
Stay on course.
Stay on course. Anisha, always a pleasure. Many thanks for joining us here on CNBC-TV18, and we wish you the very best of luck. That's the message. It's been a good 2024, and 2025 will be a year that the group continues to stay on course, in his words. And there's a lot that is there to look forward to, including the big, bold bets that are expected to be made across each of their businesses, including the growth gems. We will take a break here, but the conversations will continue on Davos 2025. Don't go anywhere. Back in a moment with more.
Welcome back to Business Lunch on CNBC-TV18. And now Donald Trump has been sworn in for a second term as the President of the United States. Immediately unveiling several executive actions, he declared that America was entering a golden age. Trump returned to the White House with strongman image, aiming to reshape U.S. policies on immigration, tariffs and energy. He promised an all-powered presidency and listed immediate actions like declaring a national emergency at the U.S.-Mexico border and renaming the Gulf of Mexico as Gulf of America. And with that, we're absolutely out of time on this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, you'll have more news and updates coming in.